Yo guys, welcome to the new video. This video is about the algo structure and how to use the algo structure and understand the liquidity and take the sniper entries. So, smart money people will look the market like this. They will look the break of the structure here. Then they will anticipate the reversal. But most of the times, these order blocks are completely fake. The break of the structures, it is all completely fake. The structure is a lie. The structure is a big lie that you have ever told to, because the market doesn't care about the order blocks or nothing, because the market don't know, because at the end of the day the order flow is not responsible for the move. The liquidity is responsible. Many times then what happens is they will be used as the trap and they will go in the real direction. Many times you can see this pattern, right? Fake break of the structure. Here you can see fake BOS, fake BOS, and then a market got rallied. This pattern happened at every time. So you should understand the main important thing here is the liquidity. If you understand the liquidity, then you can understand why the market is moving. So to understand the differences between the algo market structure and smart money market structure, there are some differences. Smart money people will understand the direction of the market by break of the structure. Smart money will understand the market is going up by understanding the break of the structure here. But what the liquidity theorem people will trade is, they will understand this liquidity got taken out. So that's why the market is reversing. It is the main reason. The reason is not break of the structure. The reason is liquidity. At any given time frame, if you understand the liquidity, you can understand why the move is happening. Everything is because of the liquidity. Here, every reversal, smart money people will look like this break of the structure. But why this push happened? Why this big push happened? It's just because of the liquidity. Liquidity is resting here, so that's why this push came. Why this down move happened? Again, this liquidity. Every move is responsible because of the liquidity. This is just the algo structure is. Can you see the algo structure here? Everything is algo structure. Any time frame, algo structure is same. So this is how the algo structure looks like. This is how the real market structure looks like, right? So for every high and low in the marketplace, there is a liquidity. Every high and low in the market, there is a liquidity. So if the market is uptrend, the liquidities that are in the upside are called the transactional liquidities. The liquidities that are in the opposite side are called inducement liquidities. Inducement liquidities are very powerful because that's where majority of the people will assume the buys. For example, if the market is going uptrend, tons of people will buy here. So that's why inducement liquidities are very much important liquidities. Transactional liquidity. You can wonder why the market always moves in a zigzag pattern like this, not in straight line, because after the transactional liquidity happens, the market will reverse. The reversal will happen. This reversal came and mitigated the order block because of the liquidity here, liquidity that was taken out here. Everything is because of the liquidity. Can you see here? This move, this liquidity offered this move, and this liquidity offered this move, and this liquidity offered this move. Everything is comprised of the liquidity. Can you see here? This liquidity offered this move, and this liquidity offered this move. Everything like this is because of the liquidity. Everything is basically liquidity. Can you see here? After this small liquidity is taken out, the market got reversed. Huge reversal. Everything happens because of the liquidity. So I think you got a basic understanding between the algo structure. We are basically doing the opposite of the smart money. So In the right side, I will show how the smart money people will trade the markets. They will think the market moves like this. They will think the market moves like this. But in the reality, it is just for the textbooks. Other than textbooks, it is worst. It is just BS. See, can you see these type of pattern in the marketplace? Fake breakouts, fake breakouts, fake breakout again, fake breakouts. This is completely bullshit. The market is completely random like this. It's because of the liquidity. Liquidity is the very important thing in the marketplace, right? So the important thing is what is the algo structure. This is the algo structure, and also which liquidity is to trust and what are the types of liquidities. So in this type of video, I will exactly explain how many types of liquidities are there and how to trade the liquidities. So for every time frame, if you go, there are separate liquidities. For example, if you go to the weekly time frame, by going into the weekly time frame, you can draw the understanding for the daily time frame and 4-hour time frame. For example, you should just understand the sweep of the liquidity, last liquidity sweep of the 4-hour time frame, weekly time frame. The last liquidity sweep is bullish because here sell side liquidity is taken out, so the market is going up. So that's why if I am in buys here, my first target will be this liquidity. I can take these sales because I know this is just because of the liquidity that was here. And again, I can sell here because why? This is the liquidity. Can you see how easy it was when we understand the liquidities? This is how powerful the liquidity concepts are. If we understand these liquidity concepts, we can know why the market is exactly reversing. Can you see this offer? This is called the inducement liquidity, what I told you. If the market is moving in uptrend, this is called inducement liquidity. This happened in every time frame. Again, this is also inducement liquidity. Why? Because moving in uptrend, mitigation, again it was moving in uptrend. So I can show you many examples you want. If you see here, this is the transactional liquidity. Market got changed its character here and it got some good reaction. And again, I can see the transactional liquidity here. The market gave some 1 week push, 2 weeks push. Again, the major transactional liquidity is here. The market gave nice push after 2 days. 2 weeks it was huge bullish. The market is huge bullish because this liquidity is taken out simply. Again after it, this is the liquidity. The market went bullish for 2 weeks, and after the major liquidity got taken out, that's why the market is reversed simply. This is how the algo market structure works. See here, this is one liquidity. If you see, this is one liquidities. Can you see the reversal? Huge reversal because of liquidity. Don't confuse if you are feeling lost by the concept, because I have so much of experience. That's why I'm moving fast. But I will explain each and everything exactly how to use. Don't worry. At the end of the video, I will explain how to use. I'm just showing how many smart money traps are there. If you use the smart money concepts like break up the structures like that, see how many times you will get sued in the marketplace. Completely bullshit. Smart money concepts are completely bullshit. If you understand the liquidity, then only you can sustain in the marketplace. Otherwise, nobody can help you. The liquidity is the key. I think I'm showing you the real stuff. This is how the market works, mechanics works. If you see here, everything is engineered. Each high and low in the marketplace is because of the liquidity. Can you see every high and low? Liquidity. liquidity. Everything is liquidity in the marketplace. Can you see that at the top of the tip here, it was taken out by a little bit and the market got reversed. So this is the basic understanding of the algo structure when you are trading. This is the basic understanding of the algo structure. So this is the weekly time frame. Right now, I will go to the daily time frame and show you the another liquidity points. For every time frame, there will be different liquidity points. It's just because of its nature, of the price nature. Simply, why you don't sell here? Because this is not a liquidity. This is not a transactional liquidity. This is just the uptrend. The liquidity that is there is here. This is one liquidity. This is the place where I want to anticipate the price reversals. Until then, I am bullish. And also this liquidity. Lot of liquidities are there, right? This is how the price moves, guys. Simple. This can the smart money people, how they will trade is they will trade the break of the structure. And they will trade like this. This is the only time they want. But 99 times they will get lost in the marketplace because they will be in the cells here. This is how you can understand the liquidity concepts. Every time a liquidity is taken out, you can anticipate a huge reversal. It's like you can trade the markets. You can buy here and hold up to this liquidity point. You will get huge RRs. So you understand how to identify the higher time frame liquidity points, right? So in this video, I will explain you how to go from higher time frame to low time frame and understand where the market is going. So first thing first, don't confuse guys. First thing first, you start from the daily time frame. I don't use a weekly time frame. I just go from daily. So first thing, keep nude chart. Identify which liquidity is taken out. Keep the chart nude. Identify which liquidity is taken out. The liquidity that was taken out is here. This is the liquidity that was taken out from the left. So what I can anticipate from the liquidity standpoint? From the liquidity standpoint, I can anticipate the market can take opposite side of liquidity. This is the basic algo structure. So I am bullish in the marketplace according to the daily time frame. I am bullish because of the liquidity. What liquidity is telling me? I am bullish. So entry side. On the entry side, I will try to take buys. That's it. Simple logics. If you see here, for the 4 hour, there will be separate algo structure. If you can see, for the 4 hour, there will be separate algo structure. These are the liquidities for the 4 hour. Yeah, this is the liquidities for the 4 hour. Can you see? Each different time frame has each different liquidities. This is how the market mechanics works. Each liquidity got reversals. This is why the reversals will happen in the marketplace. These are not daily liquidities. If you go to the daily, you can't see them if you go to the daily time frame. These are just the order blocks. But if you go to the 4 hour time frame, you can see huge pushes towards the downwards. Because there the liquidity is there, that's why these pushes are coming. If there is no liquidity, then the pushes don't come. Simple. So we got a bias, right? We got the bias. Our bias is bullish. So how do you take that way in a bullish direction? So what you should do when you are coming into the charts, you should see a pattern like this. Fake break of the structure towards the upwards, inducement, and then you should enter here. Here, stop loss at the high, stop loss at the low, target the high. This is the basic pattern, algo structure pattern you can follow to trade with the smart money. So in this video, I will show you exactly. Don't worry. So first thing first, where we got bullish transaction, we got the bullishness after this liquidity is taken out. So all days we can play the bullish transaction. Here again, this is the transactional liquidity. Here if you see transactional liquidity, that's why we know at the inducement liquidities only we will get reversals. At the transactional liquidity, these are just retracements until the order block. We can trade these retracements, we can take the sells because this is the daily time frame. In the 15 minutes we can take the huge sell-offs because you can easily tell this liquidity is powerful than this liquidity. If you use common sense, these are just retracements, these are not reversals. If you see here, I don't target this liquidity, I will target this order block because the market will go up because of the high time frame liquidity. That's why you should always have a high time frame picture. So I will sell here. Let's check if there are any sell opportunities here. This is the liquidity, right? So first thing first, you should identify the pattern. I told you, fake break of the structure. The market is moving like this, like this, like this, and the market pause, break the structure. So we should identify the fake break of the structure and take the trade. Can you see the fake break of the structure here, guys? Lower low, lower high, lower low. Now I will use this as the liquidity. This is the exact entry setup I did. And where is the target place? Targets. At the target, you can go to the daily again, daily time frame again, and just target the order blocks or imbalances, whatever you want on the daily time frame. Yeah, this is the order block that was left unmitigated. So then you can target that. This is the easiest type of trading you can do. Simple trading, guys. One position, and again you can find lot of positions by this type of trading. Again, same setup, liquidity grab, mitigation, same things happens every day. This is all bullshit. This is simply the range. You should not trade ranges. That's it. So how should you take the buy? When you should take the buy? It's also a simple. You should wait for the building up of the orders. This is what you need. Build up of orders. Lot of liquidity is engineered here. And then you should take a buy position here. In this video, I have just explained how to follow the smart money. This is the exact way to follow the smart money, people. The real smart money, not smart money concepts. And what's the target? What's the target you can hold? Again, go to the daily time frame and then just understand what's the next obvious target. The next obvious target is this liquidity, right? Simple things, guys. You should have lot of patience and trust in this position in order to be profitable in the marketplace. If you see here, again the market came to mitigate the order flow. This is called order flow. You can take the entry again here because this is all again the range. This is all range mitigation. You can buy here. Lot of positions are there to play. See here, you can buy here, buy here. There are still no positions. And why this reversal happened? Hey, you can understand why this reversal has happened. Simply because there is a structural liquidity in the daily time frame. So this is the break of the structure. Huge imbalance indicates in the 15 minutes. If it comes, it is very high probability. It indicates the banks are behind the move. They want to reprice the algorithm to the discounts to rebuy. So this is where the structural liquidity taken out. So where I should target? I will target at least the discount 13 hour. I just need 13 hour. Don't be greedy. If you are greedy, you can't make money in the marketplace. You should just do what the liquidity is giving you. So where I can know the market is going to reverse, where I can know exactly this pattern, build up order clean, order block mitigation. If you see here, I can take a lot of these cells again. Same pattern, same pattern. If you see, this pattern arrived again. 15 minutes I will be in the cells. So where I can buy the market? I just wait for the break of the structure. This is the real order flow. Real order flow, real order flow. Again, if you see here, this was the liquidity graph. Point of interest mitigation. I will be in the buys. For sure. I think I took the buys there. And yeah, I took the buys. I took the buys there. And targeted this liquidity. This is my first TP. And my second TP is this liquidity. This is how easily you can trade the markets from one place to another place. You should just wait for the confirmations. For example, if you see, we took the sells here, right? You can take buys here also. I will exactly show you. This is how the market is moving. You can take this buy here. I think I took this buy. Yeah, I took this buy because simply market oscillations, because it mitigated the order block. It mitigated the order block. Break of the structure happened. This is the real break of the structure. I can follow the money. This is the liquidity that got taken out. Target the next nearest liquidity. Simple trading, guys. No need to overcomplicate any stuff in this business. It is very simple. If you understand the real logic behind the markets, how the market moves, etc. And if you understand, this is completely a range. The market is forming a range. If the market again came back, you should understand it was just forming a range. You should wait until the range got taken out. Then the range got taken out. The range got taken out here. The range got taken out here. And this is the break of the structure. Now, what I told you, you should wait for the pattern, fake break of the structure pattern. So, the market oscillation, how it's moving is here. I didn't see any lower low here, so I can't consider this as the liquidity gap. So, honestly, there is no entry pattern here. The only entry pattern I can find is here. This is the liquidity. I will buy here. My target will be here, 25 RR. And again, this liquidity got taken out. After this all liquidity got taken out, I should wait for the another break of the structure to take the trade. Same thing repeats every time in the marketplace, because this is all huge trendline liquidity and also a confluence of this order block. You should just play the narratives sometimes. Target this liquidity. And again, you should understand we are in the daily discount. This is happening. I can buy here. Same thing, same liquidity patterns. I can buy. Same thing, I can buy order flow. Structural liquidity taken out. I can sell here because 15 minutes pattern, what I told you. Break of the structure. Now the market oscillation changed. This is where I buy. Simple things, guys. No need to overcomplicate any stuff in the trading. So you may wonder why this reversal happened. You should just go to the high time frame and you can understand why exactly that reversal has happened. If you see here why that reversal has happened, you can know because liquidity has taken out and order block is mitigated. If you see this clean order block is mitigated, that's why this move came. Simple. But there is no entry pattern for me in this move, so I simply avoided that move. Simply, I don't care whether this is a winner, I don't care. But there is entry pattern again for me. Liquidity. I will exactly enter here. Same pattern happens over and over and over and again. And also there is my pattern also. What I told you. Higher high, higher low. Liquidity. Liquidity. Again, why this move happened after the liquidity? Break of the structure. So what you should do, you should just wait for the liquidation. Where is the liquidation? Here is the liquidation. Mitigation. This is my cells. Where is the target? Structural liquidity. This is easy to be, guys, but I think it will be tough for you to understand. But you can get it on the time. You can get it. It's not that much tough. So these type of stuffs we do every week in and out. We kill the markets in our community. So I am currently giving the Black Friday offer for my newly coming students this month for the December mentorship. I'm giving 50% discount. The original price of the bootcamp is 500 bucks, but now it is 250 bucks. If you guys wanna learn how the smart money works under real market mechanics, you can join and consistently earn money and have a comfortable living with the markets. Peace, guys. Hope you understand the algo structure.